following content is an update and technical analysis on the US Tech 100 Nasdaq futures based upon the daily interval, in which I will hone in and zoom in to the 60-minute time frame and deep diving additionally into the volatility index with the VIX and some key junctures and or significant developments that I see within the largest market cap company within Apple. And yesterday, on the 19th of December 2023, we were trading spot price 16,824, where we were within the beginning stages of the construction and foundation of this rising bearish falling wedge pattern, where we put in a beautiful divergent high, had a confirmed bearish and negative divergences really constructed amongst all four key technical momentum indicators, and I had remained adamant. Watch for a potential hourly breakdown, sell signal close. Short sellers and or bear traders wanted to hone in on for the ultimate great risk reward ratio short trade setup to the downside with the potential backtest and or counter trend snapback rally to go on to hit these additional targets. And here's the update. And really to the button, upon incrementally taking out this primary uptrend line, we end up having a perfect backtest right amongst that top of the primary uptrend line. Ended up breaking down, had that first initial breakdown hourly interval sell signal where we consolidated briefly throughout that span of time, had a great snapback and or counter trends rally where the mid air fizzled out of the long trade setup, where a ton of margin calls, stops go off, you completely taking out every target that I had issued yesterday. And the entirety of that trade was good for a 1.6% crash to the downside, especially if you're an active and or day trader. Bounced right to the button, right off the 16,554 price support. And that entirety of that move was good for, call it 0.3% to the upside. And here we are challenging the 236 fibs retracement, calling 16,603 price resistance. And I believe this could be the beginning stages of a potential bear flag continuation pattern with your first initial bear flag pull and a construction of a bear flag, which where we could begin the potential stages of a near-term bounce, potentially even up to the 16,657 price resistance, and it would keep the bear flag intact. Primary reactionary uptrend line at the bottom of the flag would have a perfectly measured target right back down to the 50% fibs retracement for another 1.83% crash to the downside, constructing the finishing touches of that bearish flag pull, and that would be 16,315 50% fibs retracement. I have added the daily interval price support levels coded within the TAN 16,447, which aligns perfectly with the 382 fibs retracement here on the hourly interval, and additional primary reactionary downtrend line is based upon the 16,160, very close to the 618 fibs retracement as well. Just a ton of reaction right across the entire Fibonacci retracement levels. And then additionally, the big level, the 16,002 price support is identical right to the 786 fibs retracement in correlation of the daily time frame, where we have technical momentum indicators just crashing below their zero line thresholds, where damage is being poured and inflicted upon some of these key transitioning inflection points, only increasing the odds more downside to come. And upon zooming you out to the daily US Tech 100 space, this is the 16,447 target one, and additionally the primary reactionary benefit of a doubt based upon the 2021 reactionary highs there. A lot of key transitioning inflection points. If and when we undercut the 16,447 price support, that would be the additional next target right up in sync of the 16,002 price support. And then ultimately, the most imperative inflection point that needs to be held is the first initial primary reactionary downtrend line, which will come in correlation of the 50-day moving average and the 15,718 price support there, if and when we go on to retest and re-challenge some of these key inflection points. Taking you out to the VIX volatility index based upon the daily interval, and I believe we've taken out a key juncture based upon this bullish falling wedge pattern with positive and or nice clean divergent low with positive and bullish divergences really constructed amongst all four technical momentum indicators, with confirmed crossovers in the stochastics 1033 just churning to the upside, where we initially took that key inflection point out. We backtested the 1275 price resistance, consolidated briefly, and that is as solid as a green candle close breakout as you can possibly get here within the daily time frame, with additional targets up above the 1375 price resistance, the 786 1427, and the 1548 price resistance, which will come into correlation very in sync with the 50-day moving average and 200-day moving average for a potential prolonged setup on a rechallenging of these price support levels in correlation of the 50% fibs retracement. And then ultimately, if things were to get really bad, we start taking these levels out on a rechallenge of this primary reactionary downtrend line, call it multi-year price resistance, and that would be the ultimate key inflection point to revisit based upon the 236 fibs retracement. And that is the ultimate neck in the line. I believe if that level is taken out, that would issue nothing but a fury of selling in the stock market, setting up what would be geared up as a potential big move crash to the downside if and when some of these key significant levels are taken out. Taking you out to Apple, the largest component to the S&P 500 here off the daily interval. And this is what I see here is a beautiful bearish rising wedge pattern where we already snapped that key inflection point. We have confirmed negative and bearish divergences constructed on all 4 technical momentum indicators with confirmed crossovers in the oscillator and the moving average convergence. And that signifies damage is being poured in the top component of the stock market. That, in my opinion, based upon the daily interval, is a confirmed breakdown, back test, and rejected upon that key inflection point. And these are some key additional targets to hone in on with the 50 exponential moving average. 189.21 price support for a 3% crash down to 187.34 for a 4% crash, in which that level must be held. We had additional existing home sales showing some improvement from the record lows today. Consumer confidence rose amid declining inflation expectations and worsening labor market conditions. However, the earnings report from FedEx and General Mills cast doubt on the narrative of a resilient consumer and a cyclical rebound. Mike Wilson, one of the biggest prominent bears on the street, recently just changed his stance bullish, and shortly afterward, the markets took a downturn, serving as a potential contrarian indicator. And when you consider the billions pouring in through panic buying and a pool crowded with nothing but bulls and bullish traders, this scenario has the potential to create the ideal conditions for an intense market crash and a rush towards the exits in panic.